Hello trade pros. In today's video, I'm going to share with you how to use a specific chart type called the Renko bars chart to help you identify clear trends, momentum, and reversals. If you're still using a time chart, this is going to be a very powerful tool to add to your trading belt. Let's jump right into it. These Renko charts are very powerful tools to help you run a position in the trend. One of the best ways I like to use them is to have a position that I've already analyzed using my other tools and techniques, and once I take profit on a partial part of that position, allowing the remainder to run and continue to capture and accumulate profit as long as the trend is intact. This is called a runner in the trading business, and the Renko charts are amazing for that. Now let's go into the screen here and I'm going to explain to you what a Renko chart is, how they're formed, and how you could use them for trading. This is a chart of Apple on a traditional time and candle basis. First of all, what is a candle chart? A candle chart is formed based on the passage of a certain amount of time. It takes the open, high, low, and close of a security and boxes that out into a given period of time. Right now you're looking at a daily chart. So for the entire day, that price action's open, high, lows is taken and plotted on the graph. However, how did that open, high, low, and close form? You lose an idea of how the battle took place within the actual candle. And on top of that, is time really important to the market? No, the market only cares about volume and price. And the Renko chart is a way to use price to form new candles in order to give you an opportunity to run your trades and to ride the trend in the direction that it's going. So let's have a look at a Renko chart here. On Apple, the way you would activate it, our current symbol is Apple. You click the chart type on TradingView. You go down in here into Renko, and that's going to change the chart to a Renko chart type. A Renko has different bars, and they're formed based on an absolute amount of price change. So for Apple, if we put 1 on here, it would mean that for every $1 Apple goes, a new bar would print. If the price action went, let's say, 50 cents higher, and then pulled back another 25 cents, and went $1 higher, it would not actually print a new bar until we get $1 move. This means that the information that it took to print a new $1 Renko bar is actually lost. And one of the downsides of this chart is that you're losing some of the minute or the microgranular information within the candle. But what it helps you do is paint a larger term picture of where the trend is going. There's no wicks, there's no highs and lows, there's just an open and a close. And these opens and closes only occur when you have a given amount of price movement before it moves to the next candle. So in this case, looking at it as a 2, if we actually went under format, went under box size, and increased this to 10, this would only print new candles where Apple made $10 runs at a time. And if you go back all the way to 2009, you would encapsulate the entire movement in just an uptrend on Apple. So as you can see, you need to have a little bit of an art when you're drawing a Renko chart. You need to decide what is an amount of increment that you want to track for that security. So for Apple, for example, a 50-cent move would make sense. It would allow you to zoom further into price action. And you could see if you go into a 50-cent or a 0.5 Renko, Apple's been moving down the entire time. So you would actually allow yourself to stay short and ride this bar until such a time as you got a 50-cent increment or you get 1 green Renko. Now, another useful function of Renko charts is they allow you to draw strong resistance levels. With these candle types, you could now begin to see strong resistance because it eliminates the chop and it makes it visually appealing. You could stay on the short side of the trend as it's going down so long as it's pointing new red Renko bars, or you could wait for price action to pop above to get stopped out of that trade. This is how it allows you to track with the trend. What does a 0.5 value mean in Apple? That's almost an arbitrarily chosen number as a 5-minute chart. In order to put some substance to this, you can start to implement the average true range to help you filter out some of this noise and make it a little bit more relevant for the security that you're following. Because 0.5 is a man-made value. At least the ATR, or the average true range, looks at price action from before and implements that to your chart type. On TradingView, you could actually click the little gear wheel up here, which allows you to go into the settings, and instead of using box size assignment method traditional, you could use ATR. Now what ATR stands for is average true range, and let's assume that we want to see the average true range for the last 7 days. What that will show you is the last 7-day ATR value, and that is what will determine or create the box size. Now, if you want to see the ATR for comparison, what we could do is click Add ATR Study, Average True Range, and if we change this to 7 days, you'll now begin to see the power of this study. So if you go 7 days, simple moving average, what it will do is, because it's showing you a reading at the moment, the ATR, average true range of 5.71, it will create this bar to be $5.71 for you. It will mold or form these Renkos around the dollars of the average move in the last 7 days. This is now a price chart that's dynamic to market conditions and not a set arbitrarily chosen value. What I would suggest for you to do in your trading is to use a number of these Renko charts, use a number of these values for your products, and find out which ones work the best. One important thing to realize, though, is that this is just one tool amongst many. You should have an entire toolkit. This is not a standalone strategy. This will not be the one thing that makes you a millionaire, because at the end of the day, the secret sauce is you, how you execute and how you manage your positions. This is just a helpful tool to help you stay on side with the trend. When you look at the Renko chart here, you're very unlikely to think about a short trade because it's still bullish. Until you start to see some of these support levels break down at 155, then you can start to ride the downside and continue to ride the downside so long as you're getting red Renkos forming based on the ATRs here, or the average true range. One way to implement this to your strategy is use it only for sentiment. So if you have a trade idea, make sure that it confirms with the Renko chart. If you want to buy, for example, at this moment, you would want to see these Renko levels of 155 hold. And if you switch to a traditional time chart, will that 155 hold? Well, let's have a look. Let's go back and go into candles. And you can see that the 155 level is still clear here, but it's a lot harder to see with all of this noise and chop. In fact, what else you could do is have a side-by-side comparison of a Renko versus a traditional time chart. And you can see that if we go back to April 5th on both of these, the Renko represented this time frame of movement in a much more trend-based format. It allows you to see the trends, it allows you to see the market rotations and pullbacks, and it allows you to see levels more clearly based on the cluster and accumulation of price. That's why these Renko charts are so powerful. They basically factor in market rotation, market structure, and they build candles based on the strength of price movement in comparison to the average true range for the period you've selected. Once you start implementing these to your trading strategy, you'll find they make a massive difference with staying on trend, and additionally allow you to capitalize further on some runners or some positions you leave in the market to run with the trend to continue to accumulate profit for you in the direction that you've selected. There are many uses for these Renko charts, and I've introduced you to the topic, but I hope you'll take this information and apply it to your own trading, and you'll start to experience the power of non-time-based charting. In our futures course and our day trader subscription package, we go into full detail on what a market rotation is, how to count market rotations, what they mean, and how to plant levels and identify low risk, high probability buying opportunities using market structure and advanced non-time chart analysis. Head over to our website and check that out, or click the link in the description. Hope you guys have enjoyed this little Renko introduction. All right, and there you have it. I hope you've enjoyed today's clip. I would encourage you to start applying this information right away to find the settings that work for you. Put Renko bars in your technical analysis regime, and you'll be able to find stronger trends and track along with them to optimize your profit. There's a saying in the business that you're going to be a successful trader if you cut your losses quickly and let your winners run. Using these Renko charts, you're going to know when it's right to let those winners run, because you're going to see the trend clearly. I'd love to hear from you. How are you going to apply these Renko charts in your trading strategy? Thanks for tuning in. Please comment, like, share, and subscribe. We got a lot of great content coming your way. And remember, always manage your risk and trade like a trade pro. Goodbye.